19.4 work together. For each of the transactions completed in year 4, journalize an entry for additional depreciation if needed. Use page 15 of a general journal. Source documents are abbreviated as follows: Memorandum M, Receipt R. So first they're showing us in our question assets, we're seeing our plant asset record sheet for the display case, for the workstation, and then here are 2 transactions. So we're selling our display case on January 5th, and we're selling our workstation on August 10th. Now, the first step that we have to do is we are going to record any additional depreciation. Well, when we look here, selling on January 5th for the display case, we don't have to record any depreciation because we sold it at the beginning of the year. However, for the workstation, we are going to need to record our depreciation while we owned it that year. So this is going to go into our general journal. It's our only choice. I'm going to put in August 10th. Now, hopefully remember that we are always going to debit our expense account. And we're going to credit accumulated depreciation. I can spell. Okay, our document number, it was Memorandum 61. Another hint that tells us that we're going to have to record depreciation is that we have 2 source documents. Okay, now we have to figure out how much we're going to depreciate. So let's go ahead and look at our workstation plant asset record sheet. And we are selling it in year 4. So notice we have depreciated it through year 3. It depreciates $960 a year. However, we don't have it for a full year. Now, we're selling it on August 10th. Remember, the date is August 10th. Now, remember, the cutoff is August 15th. So we're not going to depreciate it for the month of August because we didn't own it for half of that month. Okay, so we're only going to depreciate through, not September, we're going to depreciate through July. So January, February, March, April, May, June, July. That is 7 months of depreciation. So we're going to figure out $960 a year that it depreciates divided by 12 months. It depreciates $80 a month. We're going to take 80 times 7 months, and that's going to give us $560 for that last year of ownership. So we're going to debit the expense and credit the accumulated depreciation. Okay, that was it for step 1. Step 2. Now we need to use page 3 of our cash receipts journal to record the disposal of each plant asset. So now we're going to go back to our transactions. On January 5th, we're receiving cash for the sale of the display case, plant asset number 105, $3,000, receipt 217. I'm receiving cash, so I'm going to go into my cash receipts journal. January 5th. Now I'm receiving cash, so I'm going to go in and put my cash debit first. It tells me that I'm receiving $3,000, so I'm going to go put that in first. Now I'm going to go back to my account title. I'm going to get rid of my depreciation, my accumulated depreciation. So I'm going to go to my display case. I'm going to look at my plant asset record sheet, and I'm going to look at what was my accumulated depreciation when I sold it. It was $1,440. So I'm going to do my accumulated depreciation, store equipment. This was receipt 217. And I'm going to debit it for the accumulated. So I'm going to debit $1,440. Okay, now I'm going to credit, I need to get rid of that store equipment. So when I look, when I initially bought it, it was $4,040. And that's what we still have listed in our store equipment account. So I need to get rid of that. So I'm going to credit store equipment for $4,040. Okay, now I want to check, do my debits equal credits? And when I look, my debits do not equal credits. So I need to figure out, do I need another debit or do I need a credit? When we look at this, I'm going to need another credit. Now, other thing that we can look at too is look at our ending book value. Our ending book value was $2,600 on that display case. However, we received $3,000 for it. So that right there tells us that we made money on that display case. That tells us we have a gain on plant assets. And a gain on plant assets is always going to be a credit. So we're going to credit 400. Now when we add up our debits and credits, now they do equal. Let's look at our next transaction. Our next transaction is on August 10th. We received cash for the sale of a workstation. Plant asset number 106. We received $2,000. Remember, we've already used memorandum 61, so here we're going to use receipt 281. So I'm going to go down to my cash receipts again. August 10th. I'm going to put in what my cash debit is. I received $2,000, so that's going to be my cash debit. After I put that in, I need to look at my plant asset record sheet. So I'm going to go to my workstation plant asset record sheet, and I'm going to look at my accumulated depreciation. Now, the thing about this one is remember, we added that depreciation is. So this is kind of annoying because they don't have the next page for us. So if we remember, our depreciation for year 4 was $560. So we have to figure out our new accumulated. We're going to take the year 3 accumulated, 2160, plus what we figured out for year 4 or annual, which was 560. That tells us that our new accumulated is 2720. Okay, so I'm going to go down. Again, I'm going to debit my accumulated depreciation for whatever that is. And this time we have office equipment. And receipt 281. So I figured out my accumulated was 2720. Okay. Now I'm going to look and figure out what my ending book value was. So to figure out my ending book value, I'm going to take the original cost, $4,800, minus what I figured out to be my accumulated depreciation, $2,720. That means when we sold the workstation, we sold it with the ending book value of $2,080. But remember, we only sold it for $2,000. So when we look at that, that right there tells us that we're going to lose money. Okay, so I know I need to debit that. So I'm going to debit my loss on plant assets. My loss on plant assets is going to be $80 because remember we figured out the book value to be the book value to be 2,080 and we sold it for 2,000. Okay, my debits and credits don't equal because I still need to get rid of that office equipment. So I'm going to credit office equipment for the beginning amount, how much we paid, and that was $4,800. Okay, now when I add up my debits and my credits, they will equal. Okay, my last step then is to update on my plant asset record sheets. So how we disposed of it. So I might want to look at my cash receipts journal. When I look, we know that we sold our display case. So I'm going to click on sold. We sold it on January 5th. And we sold it for, here's our cash debit. We sold it for $3,000. Okay, the next one is to our workstation. Again, when we look up here, that was on August 10th. We sold it on August 10th. And that one we sold for $2,000. Now, we also need to update that depreciation. So remember, we figured out that depreciation to be $560. We figured out our accumulated depreciation to be $2,720. And then our ending book value was $2,080. So that's why it's kind of annoying because we would have to click back to go back and look at that information. I have it written down though, so you might want to do that when you're working on your own part, is make sure that you write down your numbers. So that is it for 19.4 work together. Do your 19.4 on your own and then go on to 19.5 lecture.